Welcome to Market Momentum Tutorials. I hope you watched tutorial 1. There's a total of 9. It's a new concept in trading. And after watching all these, come to the website and learn more watching the video reports. It's a new concept. It's got support resistance areas you won't find on a normal chart.
Here's a case where the lower mom line didn't help. It opened below the key mom line. Didn't really go for it. It had a momentum gap. It's slightly unfilled. I'll virtually call that filled because it's virtually done. It went down to the lower mom line, but again, it gave you a level to cover in a short-term short if you put it on, and to resell it when it broke it down. But you would have been seeing during the day that this 3-day mom line, even the market down there, it was going to be above a mom line the next day, close to a stretch level. It also gives you an idea where to clue in, because these two little dashes here, if you've watched the momentum range video, it tells you what these are. This is based on an unchanged market on that day. As this market drops, these move, and you would have found that above that mom line during this day's movement, because this line was intact, and you would have seen those two dashes moving up and down above this line, and it would give you an idea to cover in your position down here as well. Now we're going to look at the euro daily range. Just give you a quick, if you watch the video on expanding momentum lines, you can see we're expanding up here, so you'll know what that is. Now this started to move upwards as soon as we had a 2-day, 2 peaks. We put that bottom line in and then added a line to the first peak. We always add it to the first peak. When we get to, we do a parallel line, add it to the first peak from that, and look at that, beautifully gave us a channel line where the market went up on Thursday and made new highs and banged that line and came off it. It was a good trade to short it there. The next day we actually had a 3-day momentum line coming in there. We opened below it and slammed down to the bottom end of this channel. Now, one other thing that was in this, if you've noticed, if you've watched the video on triangles, we expanded and we narrowed in, coming to an end of a trend maybe on an expanding situation. And with a triangle, when the market breaks out of a triangle, it reverses and comes back down and usually goes down through it. So you've got an example of a triangle. You had a channel line going up here within a bigger expanding movement. So it's worth always looking for other things within other movements, because it gives you even further guidance. Another quick example, T-bond weeklies. As you can see, we've developed nice channel lines here. We got our first 2 bottom peaks there, those parallel lines there, and we're able to associate them all the way up, and they provided key points at all times. And this is also an ABC, ABC, ABC. It's a full complex movement and a full ABC movement complete. We also have channel lines, trend lines coming in, which is on those first 2 peaks. We drew the first line on that, and you can see it helped on that. The market slammed off it, and then we have a bottom channel line coming up, a bottom line coming up here from the first 2 peaks, and we haven't reached the first peak yet to put that in. Now this is the new 2-day mom line, and you can see with the 2 dashes the market closed right on the momentum line at an unchanged level. So come Monday morning, if it opens above that line, that becomes a support. But the thing is, the diffs are pointing down, so the odds are it's going to try and break it. If it does, it'll try that channel line, and if it breaks that point and that low value, which kind of is very close to that channel line, then it may well go down to this one. But we've already done an A, B, C, unless this becomes a more complex A, B, A, B, C to complete the final C movement properly. But at the moment, these are all equidistant, so we're kind of hoping that that was the C leg. It could extend into another little ABC. If you watch the wave movement video, you know what I'm talking about. Because we haven't yet got a new channel line we've got those two. We could always put that up there to start the new channel, and we'll see what happens on Monday morning on that. Last one on momentum ranges, you can see you had like a triangular formation. It broke down, reversed up, developed another triangular formation, broke up, came down. This is weekly though. This took a lot longer to come back down than it normally does. Normally it's pretty quick. As you can see, the next week it started. That was actually lower market prices, but it still started to bang back up. And we have a new channel developing there, rather like the T-bonds. Now we're going to look at diffs. On diffs, as you can see, we have a downward momentum line here. It broke up and it came back. And it's very similar to momentum ranges. For example, when we had these first two peaks, we had an A, B, C movement here. We drew that longer term line. It was a short line because it had been here at the time. This has developed into longer term line. And we put a parallel line on the first leg down. Now this is an ABC. This came down for a B leg because it didn't break that, so it's a B leg. That's an A. It's an ABC A, B. At that point, when it moved back above here, we put in the second channel line, and it actually provided us with points throughout here where the market turned, and also worked in the longer term close to these areas. Again, here it's broken up. I've got a momentum line coming down. It broke up. On longer term trading, you'd have bought it there, and then you'd have sold it here where it broke there. But again, you can draw a third parallel line from these down to this peak, and put it up even to there to match these two as a flat ABC potentially. But that one's not so important because it got to a stretch level. Again, you can see a bottom channel line down here on weekly, and if you put it up to the major channel there, down the road it came to some help. Now this is the most important diff one to show you. This is the S&P 500 daily average, and as you can see, we had a channel here, an ABC movement within the channel. It broke up at the movement, and yes, the daily average did come back down towards the channel, but in this case the market neutralized, whereas the market didn't really go anywhere. This dropped all the way down without the market moving. And this sideways movement here is a sideways channel, but we've managed to have a full wave movement in it. ABC, we had an ABC A, ABC B, ABC A, B, C, C leg. That's a first movement hopefully. And we've shot up through the channel because we slightly broke through it, and we've had a bigger break up, and I'm hoping this is the bigger break's actually going to reverse back down again. And this is a diverging top because this is the new high in the market. So we've had an A leg, a diverging top B. This is quite a long complex A. B's aren't usually this short. If the A leg's that long, it usually takes longer, but we'll see. Because I am actually looking for a top here. But you can get your wave movements even within these channels. This market actually edged up higher throughout that period, but it was up 35 one day, down 25, down 15, up 40, down 50. It gradually inched higher with this pattern. And this is a classic case of neutralization and a change in the rate of change of momentum, the ROC of momentum. This normally happens when the top's building, and in fact it went on to make new highs. I originally thought this might become a bigger C leg coming down here, but it didn't. It reversed. It had a slight break through the channel line, which meant a reversal back up, which it did. We got new highs, but I'm hoping that this bigger break is the key one to take it back down again. That concludes the tutorial, and we'll just remind ourselves of the basic rules. If you've got a descending momentum line, market opens above it, it should hold it. If it opens below it but it hasn't broken the low value, it can break it. And on an ascending trend line, if the market opens below an ascending trend line, that should hold. If it opens above it, as long as the high value is not broken, it can break it to the downside.